Fort Knox, Fort Knox, Fort Knox. Everybody's saying we've got to audit Fort Knox. This is Trump saying we're going to go into Fort Knox and make sure the gold is there. If it isn't there, we're going to be very upset. Well, guess what? If we're going to audit the gold, we need to audit all the gold. There needs to be bar numbers, weights, purity, the hallmark on the bar, and the title. Who owns it? That's the most important thing. Has the gold been rehypothecated? Now, I do think going into Fort Knox is great, and I love Elon Musk's idea of let's do a live stream. I would love to watch that. Now, Fort Knox, if the gold is there, it's more than likely there, actually. It's at the Fed that it would be missing. So this is a survey. Is gold missing from Fort Knox? And when I reported on this last, it was down at 9%. It's gone up to 21% of people thinking that the gold isn't there or not all there. So thanks to Carl Bitcoin Menger, we have the Fort Knox starter kit. I think this is absolutely hilarious. Now, if they go into Fort Knox or the Federal Reserve, what are they going to find if there has been any hanky-panky going on whatsoever in the past? You know, they've absolutely stonewalled us for decades and decades and decades. When we ask for an audit, we don't get any results when it comes to the Federal Reserve or America's gold. And thanks to Egan von Greyer's America, show us your gold hand. A potential U.S. gold revaluation will have zero meaning if they don't prove to the world that they have the 8,100 tons that we say we've got. A proper audit must, of course, include all gold leasing, and we know that central banks lease gold, futures contracts, etc. I doubt we'll ever see the true position. If you don't understand what I mean, all the paper gold will be worthless, and physical gold will really be worth its weight in gold. So, the Secretary of the Treasury, Bissett, says revaluing gold reserves is not what I had in mind when he was talking about monetizing the asset side of the balance sheet. And Otto von Bismarck said, never believe anything in politics until it's been officially denied. I'm going to restate that. You can never be certain what a government is going to do until they deny it first. Once they've denied it, you can be certain. So, moving on. StoneX CEO says 2,000 tons of gold have entered the U.S. over the last 2 months. And to which James Anderson replied, that's more than 3 times the record-sized numbers already inflowed into the Comex of late. Where's the rest going? So I want to make a speculation here. And that speculation is that the Federal Reserve, we know that central banks lease gold. And we know that there are certain bullion banks that help with the malarkey that goes on fiddling with the gold price. And so I want to point people to Ronan Manley. Ronan is an excellent analyst and investigative reporter. And his 3-part series here, The Gold Vaults at the New York Fed. Now, the New York Fed has quite a bit of America's gold. And the part number 2 is the Fed's rarely discussed auxiliary vault, and suggests that the auxiliary vault of the Fed is probably located in the neighboring Chase Manhattan Plaza facility, now run by J.P. Morgan. And so here are the places that America's gold is being held. So you have Denver, Fort Knox, and West Point is the majority of the gold. And so they need to be audited simultaneously. If they're and then all of the Federal Reserve vaults. This has to be audited as well. And if there is, as has been suggested, we know that the J.P. Morgan vaults are 5 floors below ground, right across the street from the Federal Reserve vaults, which are 5 floors below ground. Now, there is a reason for that coincidence. That's where the bedrock starts. And so you go all the way down until you hit bedrock, and both of these vaults are going to be roughly at the same level. But since there's an auxiliary vault that's not part of the main vaults underneath the Fed, could there be that tunnel? If there is, that has to be, the military needs to take charge of that tunnel and make sure nothing comes through, because it's really important that all the gold, everything is basically frozen, audited, and we get those bar numbers, weights, purities, and title to it, and the hallmarks. But down here, I said that the book value was $44.22.22, and I stand corrected. Somebody reminded me that there's even this price quoted. This is the U.S. Treasury saying a price here, and even this price is wrong. But what I do want to remind people of, the gold reserves held at the Department of the Treasury is partially offset by a liability for gold certificates, and that partially is 99.7% or something like that. I said it in my last video that all of the gold, with the exception of, I believe it's this working stock and or the display gold at the Fed. I've added it up before, but of this 11 billion, 41 million, 11 billion, 37 million has been pledged to the Federal Reserve, and those gold notes, those gold certificates issued to the Federal Reserve at the statutory rate can be redeemed by the Treasury at any time. So the Treasury can say, hey, we want our gold notes back. We've promised you gold at $44.22.22222 going on into infinity, as you will see in a moment. We want the notes back. So here you can have all of America's gold at this $42.22.222 on into infinity. And here's the reason it goes on into infinity. K98 Killer said even Mike Maloney was technically wrong on the statutory price. The statutory price is $42.29 per troy ounce. Now, take 1, divide it by 9, times 2, and you'll come out with 0.222222, and it goes on into infinity. This is a price that cannot be resolved. It can only be rounded. And that rounding error becomes larger the more ounces that you're talking about, or the higher the value that the value change that you're talking about. So this is an insane price, but this is the type of stuff the government does. $42.29. Why isn't it $7/153? Or maybe we should take that final dollar divided by pi, and because that goes on into infinity as well. So anyway, moving on, I think Carl Bitcoin Menger needs to change this to the Federal Reserve starter kit, not the Fort Knox starter kit. The Fort Knox starter kit is probably there. Now, I do want to point you back again to Ronan Manley's article and read part 3, because it talks about coin bars. This is coin melt. So the coins were just right around 92%, and deliverable bars for the Comex and so on the deliverable bars for the Bank of England were 99.5% gold. And so big discrepancy there. These coin melt bars cannot be delivered to the commodities exchange. It's something that you can't use in a contract. So if anything was used from Fort Knox, it will have been replaced with some shiny new 100-ounce bar or kilo bar from a refinery that probably did not exist back in 1933. And so it'll be very, very obvious. The coin bars, the coin melt batches were in 18 and 22 bars, and those bar lots were kept whole. The accounting is done by these lots. So it's a very interesting article. I do suggest reading it. Also, at the New York Fed. The New York Fed, when the Bank of England dropped out of the gold standard, they were the international hub of the gold standard before World War I. The intra-war gold standard, it was a combination of the Bank of England and the New York Fed. When the Bank of England dropped out, and I believe that was 1932, it was before the gold nationalization in the United States, then the New York Fed ran the world monetary system. They were the hub of the international gold standard. And those old banking bars are 400-ounce bars, also not deliverable to the Comex. So they have to, if it's leased out, they have to go out and get melted down and reminted into kilo bars or 100-ounce bars of very fine gold. And so if we see a discrepancy of the number of 400-ounce bars that should be at the New York Fed, and then there's all these new bars replacing them, then we know that the hanky-panky is real. So audit all of these places at once. Denver, Fort Knox, West Point, and the New York Fed. So moving on, I just pulled the numbers. I want to thank Weimar Silver Baron. Just pulled the numbers from Bloomberg and made this chart. 30-day average Comex 100-ounce physical deliveries. And you see the COVID panic right here and where we are today. This is still big. It is huge. There is a run. Gold lease rates. Now, this is from a Zero Hedge article. Gold setting all-time highs. The gold stock on the commodities exchange exploding. And this is during a period of time when there's record numbers of people taking gold off of the Comex. So all of these inflows from all over the world so that people can start taking this off. And according to that one source, 1/3 of it not accounted for. Where is that third going? Well, it's being delivered to JP Morgan, maybe, and then going through that tunnel over to the Federal Reserve. Who knows? I don't. That's pure speculation. But moving on, this is what has happened with the big three. And here's the red is the JP Morgan vaults. I do not know what enhanced delivery is, but you can see what happened in 2020 with COVID. And it's only JP Morgan here that has that. Let me see, enhanced delivery, HSBC, that's continued. And over at Brinks, it's barely anything. But the gold lease rates exploding. And then moving on, we have GLD, the cost to borrow, which is basically the same thing as a lease rate, the cost to borrow. So when you borrow GLD shares, if you've got a brokerage account and it's margin enabled, you have given your brokerage company permission to go into your account, borrow your shares of stock or whatever you think you've got there, and loan them at interest to somebody that's going to sell those into the market. So they're now short, in this case, GLD shares. So if you've got shares that you think are backed by an ounce of gold that are GLD, and the broker borrows them and gives them to somebody else that sells them to somebody else that thinks they own an ounce of shares, there's 1 ounce backing 2 1-ounce shares now. It's a fractional reserve scheme. Stay away from it. What's happening in the bullion markets is an old-fashioned banking crisis, but this time around, the Federal Reserve cannot print or do QE, as the liquidity that is missing is physical gold, and which it is. You can pretty much guarantee that there is gold and silver in the air over the Atlantic almost 24/7 now. That's how amazing the demand is. I've never seen anything like this, and Ed Steer has been in this for years and years and years. Now, I want to say to Ed, it isn't just the Atlantic, it's the Pacific as well now, because here is gold exports from Singapore to the U.S. surge. And you can see that in August of 2023, somebody shipped some gold from Singapore to the U.S., but look at what is happening to now. This is 11 tons of gold flowing what would basically be considered the wrong direction normally. Breaking news. Import-export data from Switzerland show that 85.58% of exported gold goes to the U.S. Now, that is an amazing number. Normally, if this is the exports from the USA, the Swiss exports from Switzerland to the USA. However, this isn't a net number. The U.S. is almost always exporting gold to Switzerland, and it's a much greater quantity than we receive back from Switzerland, and the balance ends up going to China. If you take the net, you would see that these numbers here are negative, then it turns positive during COVID, then it goes negative, and then it's turned positive again. These are extremely rare, unusual circumstances. What is happening now is an international bank run on gold, and it is serious. This is from Bullion Star. Argo Harius will start charging a temporary extra fee on minted gold products. The surcharge is $3.50 an ounce for minted gold and a massive $3 an ounce for silver, which is almost 10% over the cost. And this is on top of, this is wholesale, so it's on top of their normal premiums and mint charges. The London Bullion Metals Market Association spot price can no longer be said to represent the price of physical metal, and it can't. Physical metal is diverging from the paper price. Central banks lending gold into the market in December and February, this is Ronan Manley, according to StoneX, to provide liquidity. Providing liquidity, also known as bailing out bullion banks when they face a lack of availability of physical gold in London, to which David Lee responded, "The gold market is screwing the Bank of England vault. The Bank of England is screwing at least 72 central banks who store their gold there, like Venezuela, Australia, Argentina, Germany, Austria, Switzerland, Belgium, and the UK, etc. We are having a master feces show." And I have to agree. Now, TD Securities strategist, he says, we're sleepwalking into the silver squeeze. Markets are still sleepwalking into the silver squeeze. The disruption in the silver markets are most acute in recent history as London's free-floating inventories drain below critical thresholds for market structure. And moving on, James Anderson responds that silver is more dislocated than gold. Silver has no lender of last resort like gold has with the central banks leasing out gold. So the silver squeeze can be far more explosive. And then Bob Coleman says, attention, all those who are trading these, here I call them ETFs, EFPs on silver, which is just a bunch of futures contracts. It adds up to nothing. They don't have the metal, rather a promise from a counterparty. Let the following sink in. January's silver outflows from the LBMA, the London Bullion Market Association vaults, was a staggering 72 million ounces, the largest on record. It brought the monthly pace of outflows since Trump threatened tariffs to minus 33 million ounces per month. So the drain is 33 million ounces per month. And with the London Bullion Market Association holding 760 million ounces, it will only take 22 days versus gold's 100 days for the current pace to drain all of London's silver. What do you think happens to the price then? Silver price will have to adjust to reality if this persists. Imagine how big the deficit will be if physical buyers return to the market. Well, they're returning. So this is the supply-demand, the surplus and deficit of silver starting in 2019 and going through to today without the all of the investment demand that is just hitting the market right now. So, looking for gold at Fort Knox, and it's gone. I want to thank you for watching. We'll see you next time.